Alrighty, let's get it. We got the man of the hour. we got the famous man of the hour. Let's get it.
Charles in charge over here.
Let's get it.
That's exactly what it is.
The man, the myth.
Alright, yeah. So let's do an introduction. Well, I don't really do,
Stop lying.
I don't really do introductions anymore. Like I said, this is the DC Incentives Podcast. Now, as I was saying, please introduce yourself.
First and foremost, thank you guys for having me on this platform. It's important that what you guys are doing, and I hope that people understand the people that you bring on board and you share with them, and hope that they take advantage of what you guys are doing. So that's very important. And your presentation is your presentation. Your introduction is your introduction. So my introduction, what do you want to know? It's very simple. Come from Brooklyn, born and raised. Live all over the country. Lived in California for about 10 years. Came back home because of mom. Mom's not getting any younger. I have to take care of her. A scholar in African history. It changed when I started seeing my elders, who were the smartest people in the room, started making transition. Now, these are the smartest people in the room with all the books, but the hat had to be passed around. So I'm saying to myself, how come the smartest people in the room, but we still have to raise some money to bury them for all these costs? So I decided that all the skills that they taught me how to study African history, I applied that to money. And the things that they taught me, the same skills, applying that to money, I started realizing a lot of things and how and why we are broke as a people. Is because wealthy people teach their children things that poor people do not are not learned. So that's when it comes down to it. So in my walks and in my travels, I've been deemed to teach financial literacy by the elders, and they were like, okay, we got this part covered, we need to understand money. So what I do is I go on platforms and I speak to people and I teach about money, and that's what it all boils down to. And I break it down so that everyone can understand it. I read the big thick book, I read the white pages, I understand the language, but I have to be able to turn around and give it to our people so that they can understand it. So simply, that's what it is.
Let's go. Okay. That was a powerful introduction. Okay, so you're the man of the hour. Your name has been mentioned twice.
Well, it's okay, but for the sake of people understanding that, if you listen to LaQuania, and I'm very proud of her as I'm sitting here listening to her, because I look at where she was when I first met her to look at her now, and I don't want people to duplicate me, I just want people to learn.
Okay.
That's it, just to learn. And the application of the process, I know that you're making progress by the conversation that we're having.
Mm-hmm.
So we have the same conversation this year that we had last year. You haven't applied, you haven't done anything. But when you start talking to me about stocks and about Forex and about certain things, I'm like, okay, you are actually applying and you're learning these things. And that's what it all boils down to. So I got to give her total credit. I mean, I'm proud of this sister. I'm in her corner. How's that? Let's put it that way. I'm in her corner. So I just want to give that to her.
Let's go.
Got it.
She in the background, everyone. All right, so let's get it. Let's get these
guys got a lot of questions.
Let's get these.
Now here's the thing. Understand when it comes to financial literacy. This is actually, April is Financial Literacy Month. So understand, when we are looking at financial literacy, let's look at two different things. There's the inside knowledge and the outside knowledge. We know the outside knowledge, but there's an inside knowledge. One of the things that I've become famous at doing is I surround myself around people who are the inside. I surround myself around people who are smarter than I am. So what I do is I listen to them, and I'm able to transfer what they're teaching me into a simpler context so that an 8th grader can understand it. That's what it all boils down to. So when people start talking about mutual funds and start talking about index funds or start talking about cryptocurrency, how can I take that language and share it with someone who doesn't understand what cryptocurrency is? So I have to give them examples and analogies and similarities so they say, that's what it is. Got it. So, LaQuan, you said earlier, what is a blockchain? Blockchain is a ledger. That's all it is. You see how simple that is? So now once we understand what a ledger is, now that's the blockchain, now we understand what blockchain is. So these are things that I do when it comes to financial literacy.
Alright,
So you basically kind of help break it down in simpler terms and then explain it further on.
Correct. So what I am is I am nationally certified financial literacy instructor. I'm not a financial advisor. I don't give financial advice. That I can't do that by law legally. But I am a financial literacy instructor. So I can teach about financial matters. So I'm not going to tell you what stock to buy. I'm not going to tell you what to invest in, but I can teach you what to look for, how to do it, and then you make the decisions. I'm not going to make the decision for you because we talk about risk factors.
Yeah.
Risk factors are key. I don't have children. I don't have certain things that I don't have to answer to. So when it comes to my risk factor, I can let it ride, whereas other people can't do that. No, I'm not married. So, you have to think about these things. How can I come home to my wife and say, I just blew $5,000 on something? I can't do that. Well, I can do that, but other people can't.
Yeah.
So that's what I want to point out there. So don't ask me about what stocks to buy. Don't ask me. I'm not going to tell you.
So, okay.
It's okay if we go that's going to come up too,
It's
funny
fine.
enough.
No, it's fine. No, it's fine.
Listen, he said it.
Yeah,
from
it's
the
okay.
beginning.
Okay. Alright, so we got a lot of questions.
So can I start off with one?
Here we go. So, now let's preface this real quick now. Before we go into it, elbows and buttholes, everybody got one. Now, there are going to be some people who are going to disagree with me, but that's okay. I just
Yes.
want to share that with you. But let's be real, let's look at some of the context of what's going on where I may share something with you that you may have known nothing about and no one knew about it, but because of the information and database that I have, it's like, you know what? No one taught me that, so I need to study that and find out if Chuck was correct. That's key. Don't believe anything I say. Always research what I have taught you so that you can learn much more, because I'm not going to give you everything. That's just me.
Okay.
Okay,
Bars. Let's
So,
get it. Let's
My
get it.
question is about life insurance, but I know the difference between whole life insurance and term life insurance, but I want to know how do you figure out which one is best for you as far as which whole life and term, and then as well as if you was to go choose a life insurance, how do you figure out after you figure out if you want whole life or term, how do you figure out this is the company I'm gonna go with?
Okay.
If you understand.
Just remember, term is a period of time
Yes.
from point A to point B. Whole life insurance is better than term in my perspective, because that term insurance, it's going to run out and then I'm going to lose everything. The whole life, I can actually invest in that and I can use that later on at a different date. Now, to answer your question about which one do you choose, the question is, what is it, the end result that you want from this product? Because it is a product. So what I'm looking at is, how can I invest this money and recoup as much of it back as I can at a certain time or at a certain date, or at the certain incident that may happen. If accident, death, or accidental, whatever, which policy or which process or which piece is actually going to give me back much more of a greater return than what I'm looking at. Does that answer your question?
That makes sense, but then
You have to think about the end result in mind. You have to think about the end result. That's the key. So that's, yeah.
Because I understand, I get that. Now the next step is where I've been struggling, which was the biggest thing for me. I know I've decided I want whole life, right?
Right. Mm-hmm.
But I don't know what company to go underneath. I know we can't really say oh, go with this one. But what is it that you should be looking for so that it can help you decide what company you should go with?
The fine print. And what I mean by that is, what you want to look at is what they're not telling you. Because an insurance agent is someone that's going to sell you a product. And their job is to sell you the product no matter what. What you have to do is you have to read the fine print to see if there's anything that's going to negate that policy. And make sure that you understand what that policy is all about so that you can feel comfortable knowing that if in case of the percentage of the accident or whatever, you're safe and you're actually going to get that payout.
So your best bet is when you go to the insurance, whatever company you decide to go to,
Right.
and you do as they say.
It's your due diligence.
Yeah,
'Cause
so
you're
you just
investing.
ask them
You're
for a
investing.
copy of the, like, whatever
The policy.
the policy would
Okay.
be. You
Right.
ask them for a copy of it, and
Okay.
basically you take your time and basically dissect it and figure out what works for you and what doesn't work for you.
Correct. You pull out your highlight, you take that fine print, you blow it up, because sometimes people don't want to read the fine print. You blow it up, and you actually read it, and you look at it. And whoever's selling you that product, you question them about, this says this, how does that affect me getting a payout if something were to happen to me? Okay, so, you know what? You're covered from car accidents, except on Monday morning between 8 and 9. You know, all of that is in fine print. So you have to make sure that you understand these documents that you're signing and make sure. And also, you want to do some due diligence when it comes to other people. Are you comfortable with this policy? Are you okay? Did you get a payout? Was there a problem with you getting your money at the end of whatever the incident was? These are things that you have to think about.
That's if you get somebody that actually has that same type of life insurance that you're looking
Correct,
at.
correct. And you know, you can always Google people, you know, check online, hit YouTube, all of these things, and you'd be surprised the information that comes through that people are going to share with you.
That's tough. That's tough. Okay.
Anybody?
Go ahead, Naira on the TC.
So you mentioned earlier that the financial principles that you came that guide you
Right, before.
came from your ancestors,
Or
came
you want me to move?
from your elders. No?
Make it
No.
wider?
Okay.
No.
So
Are you
what-
talking about the 4 pillars of wealth?
Not the 4 pillars
Okay.
of wealth. You mentioned earlier that your elders had all the knowledge,
So then you put these
Correct.
back in.
and
They had the knowledge in African history,
in African history. All right.
but not in financial.
But not in financial.
Right, so you have these smart intellectual people in their field who were the greatest, were the best. But when it comes to money, they were not the best at that.
Oh, okay.
So do you see the difference?
I see the difference.
So I come in and I explain to them, and teach them about money. One of the things that most important to me is I don't care what it is, your profession you're in, financial literacy to me is the most important lesson that you need to learn. Because if you are a doctor making, let's say $500,000 a year, a surgeon, but your expenditures are $600,000, you're always going to be broke. And that's key. So once you understand this, and you understand money is a game, and once you learn the game of money, you will truly understand how laws are made, how things are being created, how situations are being manipulated, so that you can truly understand that I got it now because you're looking at it through a financial lens.
How are laws made?
How are laws made?
Yes.
By lobbyists.
And how do you lobby?
Money.
And how and okay, so let's say okay, so all right, cool. So let's say I want to create this law, or I want to sponsor this law,
Got it.
or I want to go to my district representative, councilman, or mayor, whatever, right? And now I want to put my money into something that wants to create this law, like lobby.
Okay.
How do I do that?
Who are you paying off?
Talk about paying off.
That's what lobbying is all about,
You
correct?
gotta pay off a senate.
So I gotta pay a senator or a council member.
We're talking about votes, right?
Yes.
How many votes did this bill has to pass to become a law? How many people do I need to actually say yay to that bill for it to become a law.
Hold on. Is this? Hold on. So let's rewind everything real quick, right? Hold on. So a lot of people do not like politicians, of course.
Of course. Why?
Mayors, presidents, House of Representatives, senators, right?
Okay.
So so let's say me. Well, do you believe in voting? That's one.
No, I don't.
You don't, oh wait.
Okay.
You don't believe in voting?
I don't.
As in like the process or the concepts?
The concepts are great, the process is great, but no, I don't.
You know, like the execution.
So wait, you don't believe that people should vote?
I didn't say that.
He said himself.
He himself
Hold
does.
on.
I didn't
You
say
see,
that.
do you
That's just the
Mind you, and remember, I prefaced this at the very beginning, elbows and buttholes.
Yep.
So I'm looking at it from a different perspective. How many times have we voted in certain situations and we're still in the situation that we're in now?
all the time.
Okay.
So it's called MV right? Marching, voting, and praying. We've done that for so long, but we've taken out the financial aspect. And I guarantee you, you go to a politician and you say, you know what, so-and-so, I voted for you. They're gonna shake your hand, say thank you very much. But if you go to a politician and say, I donated X amount of money to your platform, they're going to treat you a little bit different. Because why? They want more of that financial aspect to it.
Money speaks.
Got it. We have to look at everything through a financial lens if we're going to play this game of money.
I have a quick question. So even before we get even deep on money, how do you develop a love and understanding of money? How do you teach yourself that?
What do you want? Your dreams.
Okay.
I teach my nephews that everything you want has a financial number to it. So what you want to do is take out the love of money and look at what is it that I want that's going to truly make me happy.
So let's say
Put a monetary value to that.
So let's say I want to buy a home.
Got it. You love the home more than you love the money. Money is a tool. Got it? Very simple. But your home that's your dream. That's what you want. That's your legacy that you want to leave. But you're going to have to finance and fund that dream. So that's where you get the love from, knowing that I'm working to acquire the funds to be able to pay for this.
So one way to look at money is basically a toolbox.
It's a tool, yes, that's
Okay.
it. So understand that your goals, your dreams are different than mine. So our motivations are different. I don't want the home, you want the home. I may want the yacht. Do you see? So it's like, what is it? And people have to be clear and consciously of what they want. A lot of people don't know what they want because they think that they can't have anything.
That's very true.
Got
That's
it?
very true.
See, you may want the home, but I want the hotel.
Okay.
Do you see what I'm saying?
Yeah.
You may want the home, but I want something. And it's not right or wrong, it's just that our motivation, what's going to motivate you so much for you to do what you do to accumulate the funds to pay for that. If we want to go to get something to eat,
Yeah.
what we're going to need?
A lot of people would just say, let's go to McDonald's.
We're going to need money to
Money.
pay for it.
Yeah.
Everything has a monetary value to it. And that's sad to say, but you have to be real with it, because understand, if I want this book, I'm going to have to have money, because this is the society we work in.
Yeah.
This is not how it was before when it was the barter system. We don't barter anymore. You see, so that's key. What a lot of people are doing, they're using an old value system when it comes to money. Today and age, right now, the key when it comes to accumulating money and wealth is information.
Okay.
You want to teach children how to be stewards of money.
Okay.
And understand that when you teach them this, letting them know that it's okay to have it. It's okay to be able to keep some for yourself, because that's one of the first, that's actually the first wealth pillar, is paying yourself first. Wealthy people pay themselves before they pay anyone else. So what we say is 20%. Whatever, if you make $1, 20 cents goes into a can or somewhere that you are actually holding on to it
I don't advocate putting money in the bank per se, but you have to be able to protect that and put it somewhere. So understand that you're building wealth for yourself. You have to be able to be comfortable with that and knowing that I can't be me and who I am if I'm relying on somebody else. Because when you look at the word minority, what does it mean? Minor. When we call ourselves minority, remember, minorities and minor people don't speak for themselves. Other people speak for them. Minors. So we have to get out of that concept, out of that term. But again, what we're looking at building wealth for ourselves so that we can take that wealth, learn how to flip it, and learn how to magnify it, and learn how to put it to good use so that we're actually using generational wealth to be able to pass on to others.
All right, so we're gonna have to do this in order because this is too much information. This is too much to put in. Just let you know, you don't have to censor yourself. You do not have to censor yourself.
Well, I know, but again, what happens is, because we had this conversation earlier, there are certain things that you guys are not supposed to know. I'm just letting you know. So I am going to censor myself only because of some of the things I'm going to say.
Yeah.
That's all. Now, off camera, we can have a conversation, but I just want you to know that.
Yeah.
Because again, some of the things that we may talk about or we may touch on, the question is, you're not supposed to know that. We're not supposed to know certain things. Yeah.
So I want to go back to the whole thing with lobbyists.
Right.
So this is very important for our audience. That way, we know that, which is money, of course, run by bread.
Right. Mm-hmm.
So let's say you don't like this particular politician.
Correct.
But you want a certain law to pass.
Okay.
Or you want something to pass or sponsor the bill.
Okay.
Like, let's say let's say we want a bill that will help police held accountable. That way we can reduce or no more police brutality or something like that.
Okay, got it.
What do you think should be towards that bill or sponsoring the bill of lobbying or anything like that?
Now, your question is it from a financial aspect?
Yes.
No, so the process is, the bill is on the floor, it has to be voted for, correct?
Yes.
So now, how many senators or how many people are voting for this bill? Just give me a number.
50.
50. So now you need what? 51%, right?
Yes.
Okay, so all of these people, 51%, who is actually going to vote for this bill to become a law? So you have to make deals with these senators or whoever these people are to make sure that you get your 51%. You have to find out what is it that they want. 9 times out of 10, now mind you, when I say money, it might not be money because there are ways to actually notate that and there are ways to follow that, but it could be in other types of incentives. Do you understand? But those incentives in the final end cost money. So now, your daughter or your son may be going to a school, right? First year college. Okay, you know what? I can't give you X amount of money, but you know what? I'm going to make a deal with this school and grant some cash to the school so that your daughter could be accepted into this school. Do you see what I'm saying?
Absolutely.
So there are certain things that you have to look at, certain deals that are being made that don't have to be tabulated to cause a trail, a paper trail. You see what I'm saying? And all of this is washing money or figuring out how to put these things together in.
Okay. Let's rewind back real quick. I'm sorry.
Rich,
We need our audience to process this real quick.
I think we need Rich to process
So,
this.
I'm a guy from Jamaica, Queens.
Got it?
My councilman, I'm not going to say the name. Let's say I go to my councilman.
Right.
Look it up, though.
Or I can go to my representative
Right.
from my district.
Got it? Now, you know we're supposed to be talking about financial literacy, but
Yes,
go ahead. Now
it's all about
now we're talking
finance.
about politics. Go ahead, go ahead,
This is all, okay.
go ahead.
How can I bring it to their attention
Bring what to their attention?
about something an idea that I think can be created as law?
You talking about the politicians?
Basically,
Yes.
I think he's basically asking how does he lobby as a guy from Jamaica, Queens, about something that he wants.
Yes. And how much money should you think I should be putting? I'm sorry. How much money should I be putting in?
So you trying to bring the financial literacy to politicians?
No, financial
No,
literacy.
I understand what he's saying. I don't know.
Okay.
And the reason why I say I don't know is because a senator's value is more important than a local politician.
Okay.
So now, what you will pay for a senator's vote, you're not going to pay that same price for a local politician. Do you see what I'm saying? So you have to look at the value of, again, what it is that you're trying to accomplish. And also, you have to understand that what you're asking is not knowledge that will be easily put in place where people will say that it actually happens.
Got it. Okay, got you. I think that's another podcast for
Do
itself.
you see what I'm saying?
Yes,
I'm not, if
absolutely.
I'm a politician, I'm not going to sit here and say that you gave me X amount of dollars to say yes to pass this bill.
I think that's another conversation for itself. I learned something myself.
Right.
So
I mean-
we're gonna set up.
This guy's so
is that okay?
excited.
Set up a schedule for another podcast. Is that okay?
Yeah, check with LaQuania.
Listen,
I don't do anything without her.
I'll check
That's
this out.
fine.
do anything without
That's fine. And you know what? Just for that, our next podcast, what we're gonna do is we're gonna have you two together. Is that
So-
fine?
And what
next
I'll-
week. We'll be here together next week.
Oh, okay, so that means I gotta bring my team. That's fine. That's fine. Let's get it.
I've already discussed. I
guess we're recording next
Yeah, I guess this is a notification.
All I ask is that you give me an idea of what is it that you're going to ask me so I can bring documentation.
Let's go.
So that people can go
Preparation is
check
key.
the documentation
Let's
to make sure. That's all I'm saying.
So now, all right, let's get back to financial literacy. I'm sorry about that, my
I bet you
audience.
this is going to be another lobby
Alright,
question.
so-
I bet you.
All right, so let's you talked about a life insurance policy, right? So for our audience out there, our real estate Anthony brought this up briefly. There's a difference between whole life and term life. For what he's talking about is well, you said 7702, right? And 770?
Well, I didn't say that, but yes, I understand. Yes, I understand.
Actually, what is that anyway?
The TV screen.
Let's move. Let's cover that next time.
Okay, all right, cool.
Let's cover insurance next time.
That sounds like
But yes,
documentation needs to be
because
brought.
That in itself is a topic that people have to understand and discover what's going on when it comes to life insurance.
All right, so let's keep it real simple then. For the folks that does not know what financial literacy is, what is it?
Financial literacy is the ability to be able to manage resources effectively and to be able to know the outcome of your decisions.
Okay.
Very simple.
That sounds like that's a rule that could be applied outside of finance.
Oh, it can. It can. But remember, what we're looking at is, we're looking at being able to manage. See, as a community, our problem is not getting money. That's not the problem. We are holding down, was it like $3 trillion that are coming into our community? But it leaves just as fast. What we have not been taught is how to manage our money. That's the key. And when I teach financial literacy, I don't care how much you have. What I really worry about is how much you're able to manage. That's the key. It's not how much you get, it's how much you keep. There's an excellent show called Trap Queens, and I'm watching that and I'm enjoying it. And all of the sisters say the same thing at the very end. They got the money, but they never knew how to manage the money. So at the end of it, they all receive nothing. Now, they talk about millions of dollars that are passed through their hands, but after prison and after the whole thing, they have nothing. If they had me in their corner, I would have told them what to do, how to move this over here, how to put this over here, so that if anything happens, when they come out, they'll be okay. That's the key. We don't know how to manage our money. We were never taught how to manage our money. And it's not our fault. It's our fault now, because as adults and listening to podcasts like this, when we hear people talking about it, knowing that what we have to do is we have to look at the situation that we know something's wrong. We know it. We just don't know which questions to ask. So when you listen to these types of podcasts, it puts something in your brain to say, you know what, there is a circle, there is a group, there are people out there who feel the same way I do. Let me connect with them and let's get some of these questions answered.
Let's go.
Awesome.
Okay. See, this
like
is a
that.
lot. This is a lot to
Awesome
process.
sauce.
So help us out real quick. What is the language of money?
Well, simply, the language of money is just the terminology and the words. Just like a doctor, a plumber, a mechanic. If you put me up under a car and say certain things, I'm looking at you like catalytic converter, what?
Bed selector.
Got it. You know, I'm at a loss.
Yeah.
Because I don't know the language of a mechanic, like the language of a doctor, the language of a lawyer. They have language. Now, when it comes to financial literacy, there is a language. What is an ETF? Got it? What is a whole life insurance? What is a
LLC.
stock? What is a LLC? What is all of these are all languages. And once you understand the language, when you're speaking to people and people are trying to talk to you about it, my theory is this: you don't have to know everything, but just know enough to be in the ballpark. If you can understand the conversation, you take what you know and what you don't know, you write that shit down, and you say, the person said this, let me check out what this word means. And then you come back next time smarter, and you'll be able to ask intelligent questions.
Oh, okay.
Okay.
So how does the economy works?
Wow. This guy says some tough questions.
The economy works based on supply and demand.
What is supply and demand?
Oh, God.
Product, demand, supply. So now, the economy works this way. There are pieces. Now remember, this economy. Okay, let me preface this.
Oh, this is bars, y'all. This is bars here.
Well, no, let me preface
keep
this.
going.
Money has to move. You look at the term currency. Money has to move. If money does not move, nothing happens. Got it?
Yeah.
Prime example, COVID. Pre-COVID. Money was moving. COVID hit, money stopped moving.
Yeah.
Now, let's look at it this way. Let's something more drastic. 9/11. Now, when you look at certain sectors, 9/11 was affected. When it hit, 9/11 was affected. Everything in New York City, tourism. Remember, Broadway was shut down.
Yeah.
All of these things. So now what happens is money is always moving. So what you have to do is you have to look at how is it moving and where is it moving. So now in New York City, Broadway was shut down. The economy was shut down because of 9/11. No one wanted to come here.
Yeah.
Got it? So now, what we were looking at, and we didn't know this, and it was just fascinating that, where was that money going to? Because it wasn't going to tourism, no one was traveling. But remember, money is still there, it's in the economy. So what we did some studies and we found out that a lot of that money that would have went to airplanes and went to Broadway and went to tourism and all that stuff, the money was diverted into home repairs and entertainment. So now we're not going to Auntie M's for Thanksgiving because no one's traveling. But you know what? We're going to buy a home screen TV because we got to stay home. So when you look at those sectors, it was the Home Depots and then it was the electronic sectors that a lot of that money flowed from one sector into another.
Yeah.
So when we talk about the economy, remember what you have to do is you have to have supply and demand. So when you have a high demand, right? What you're going to do, you're going to have a sale. High demand, high supply, you're going to have a sale. When you have
low demand, low supply, is gonna get tighter. So what happens is you have to be able to understand the ebb and flows of this economy, and look at, LaQuania talked about it with the stock that she bought. She knew that she had the foresight to see that something was gonna happen with COVID, hospitals are gonna need this, high demand, so what did she do? She invested in it.
Well, one of the questions I have about financial literacy, especially for the millennial generation, how does financial literacy translate to home and property ownership? Could you possibly, for example, start an LLC to purchase a home? Would that be something that's economically feasible, maybe something economically wise to do?
Okay, yes it is. So now, to answer your question.
One of the things that you want to do is you want nothing in your name. And let me explain that. If you own a car and it's in your name and you hit me, I'm going to sue you. Got it? So anything that's tied to your personal assets under your name, that's mine. Okay? Now, if that car is not in your name, it's under an LLC or something else, if you hit me, then that means I get to sue the LLC. Your own personal profits are protected. So now, what you want to do is you want to be able to take as many assets as you can out of your name, because you're going to be taxed on that on another level. But if you can understand the game of money and LLCs and how they work, you'll be able to pay less in taxes when it comes to your assets. So now, when it comes to the millennials and the home, what you want to do is you want to purchase the home, and you actually donate the home to an LLC.
Yeah, but I'm not even talking about, because in order to purchase a home personally, we would need an exorbitant amount of money, especially in New York. I'm saying, could you fundamentally start an LLC and use that LLC to buy a home?
Oh, yes, you can. You can, any property under an LLC. You can do that, but do you have enough to be able to get the loan under the LLC?
How does
The LLC is a separate
company-
entity.
How does a company get the credit to be warranted a loan that would require you to buy, that you could use to therefore buy a house?
Just apply for the credit,
So you mean I could leave here today,
right?
go to wherever I have to go to on Monday, to start Naren is Awesome LLC. And with Naren is Awesome LLC, I could use that credit to buy a home.
Did he say what I thought he said?
Yes.
Okay, go ahead. I'm trying to listen to the
Yes.
concept, and I'm like, the slide. Go ahead.
Welcome to the podcast.
Go
Yes,
ahead.
he did.
Go ahead.
No, so I have Naren is Awesome LLC,
Okay,
and I go to the bank and I go, this is my LLC.
right.
Can you give me the loan that I need to buy some investment properties, let's say?
Oh, you can do that.
You can do that.
You can do that. You're not
So
going to
then-
get it. You're not
All
going
right.
to get it.
Yeah, there we go.
Now, if your LLC has a track record, and your LLC has credit up under it, and if it's growing, then there's a possibility that you can get it. You're not going to get it out the gate. You have to build the business credit under your LLC.
How do we build business credit under an LLC if the goal is to purchase a home using the LLC?
I have a class on that. Yes, I have a class on that. There are certain things that you have to do when it comes to business credit and an LLC. The LLC is a separate entity in itself. And what you have to do, there are 20 points that you actually have to do that you can actually create business credit flawlessly just by following these 20 points. One of the points is, of course, is you have to have, your EIN number, you're going to get that. But you also have a certain email that has to be correct. You have to have a virtual office. It doesn't have to be brick and mortar. And there are certain things that you have to have because they're going to look at that and they want to make sure that this LLC or this corporation is actually a living, breathing corporation. That's what it is.
Gotcha. So I couldn't just go out tomorrow, start an LLC, and then own a home. I
No,
would
you
have
can't.
to start an LLC, and I guess use the assets maybe that I have as sort of a historical proof of good credit under the LLC.
Got it?
Maybe over time I have a credit card under the LLC.
Of course,
Right?
yes.
And I use that to purchase all of my things, like groceries, or maybe even like, I don't know, work clothes, something along those lines. Could I essentially purchase anything under this LLC using my LLC credit card?
Of course.
To
It's a credit card.
right. I know that, but like, could I use my purchases as examples of good credit to the banks in the future?
That's what you're doing. Just like your own personal credit, your LLC or your S corp or C corp, it's a separate entity. And what you're doing is you're building the credit based on that EIN number.
Okay.
Got it? And remember, we're dealing with the government, so everything's a number.
Yeah.
So that's what you're doing. You're separating and you're making sure you're protecting your own personal assets by utilizing the LLC.
So why is everything a number, like Social Security, your DUNS number?
It's the government. It's the
They
government.
track you through numbers.
It's the government.
Your number.
Yeah.
And with the credit cards, are there separate credit cards, like one for specifically for business and one just for the regular consumer?
Correct.
Okay, that's how you build credit.
Correct.
Like in that business
Correct.
card. Okay.
Now remember, a credit card is a credit card. They don't care who it is as long as someone's paying the bill.
Okay.
But again, what you're looking at the separation from personal to business.
Okay.
So I definitely want to bring this up because I know we talked about this earlier off camera, and we can help out our audience. So I was taught when I was young that credit is bad.
Same
What?
here. Same here.
Yes.
Who taught you that credit is bad?
I was taught. I was taught that credit was bad.
Same here.
What did you learn from credit? Like what did they teach you exactly?
That do not use your credit at all because credit is a form to put you in debt. That's it.
I think you might be confusing credit with that.
No, my mom said the same. My mom basically came to me. She said, "Boy, if you know you get a credit card, so you know I got no money to give you to pay it back, so." So basically, what she's saying is, once you use a credit card, you got to pay back the money. And also, too, she also told me never give anybody credit card information, stuff like that.
Right.
But it all comes down to just how the mindset is with the credit card.
Credit, that's-
Yes.
So remember what I said. We were not taught how to manage money.
Absolutely.
And
Exactly.
that's key.
Yes.
So
Yeah.
bad credit is not good.
It's terrible. Yeah.
Good credit. So what we're looking at is an age of people who, and remember, credit cards, they're still new. They're not that old. So what we have is a generation of people who did not understand how to manage money. So now, one of the things that I talk about is this. First day of orientation at college, they have all the tables out. Who's there on the campus? Banks.
Okay.
Got it? First day of school, college, banks, orientation, bingo. Sign this, give you $200, no job, never knew how to manage money, just coming out of your home, but you're able to get a credit card. Okay? You don't know anything about managing money, your first credit card, what are you gonna do?
That's some
Bingo.
simple shit, yeah.
But why is this? Banks, come on, because at 18, you can sign the legal document.
Yeah. You don't need a parent guardian.
Don't need a parent or guardian. So now you're liable for that $200 or that
Exactly.
$300 or that whatever that they're giving you. Got it?
Yeah.
Boy, I'll tell you. Hold on.
Some small things relevant when it comes to us. What we have to do is we have to get into the habit of working for ourselves.
Yeah.
What happens is we've been conditioned and trained in an industrial thought form where 9 to 5 I'm working for somebody else, not understanding that you're working to maintain your hopes, your dreams, your ambitions. So I'm working at this particular job at 9 to 5 for myself, not for them, for them to give me something so that I can grow something, I can invest in something, I can purchase something, so that it's all mine. What we have to do is we have to get out of that mindset, because now once we get into the mindset, I'm doing this job, I'm working at McDonald's or Burger King's because there's something that I want to do. And they're giving me the income. I have to trade my time for money, which is kind of rough when you start understanding the game of money. But at the very beginning, that's what we do. So
Yes.
what we have to do is we have to learn that and understand that. So now when you've accomplished your goals or it's not working for you, what you do is you figure out some other way to get that cash.
Yes.
Yes.
So let's talk about the Federal Reserve. Like, how does money move?
How does money move?
Yes, through the Federal Reserve, because they do print money.
Well, no, they don't print the money.
Okay, talk about
They
that.
don't print the money. The Federal Reserve approves the money.
How do they approve the money? And where does the money come from?
The mint prints the money. That's the government. The Federal Reserve is not a government establishment. It's private banks. It's not, the Federal Reserve is not a federal institution, it's private banks. But the government has to go to the Federal Reserves, the private banks, and ask for money. So what they're gonna do is they're gonna print these coupons or quote-unquote vouchers. And they're going to take those vouchers, give it to the mint, and the mint is going to print the money. Got it?
So what do you mean by vouchers?
They're called bonds. You know what a bond is?
Yes.
What's a bond?
Yes.
Bond, basically like a savings bond. Like you
Okay.
put money away
Got
for
it.
X amount of years.
So give me another word for bond.
Investment?
I would say
Okay.
investment, but
A bond is a loan,
okay.
okay?
Okay.
You got corporate bonds, you got municipal bonds, they're loans. Got it? Stocks or what? And we're gonna come back to you.
Pieces of ownership of a company
How do you get paid with stocks?
through dividends.
Dividends or equity, right? So now, but the difference between a stock and a bond is a loan to a company. So now in legal matters, with the stock, if the stock goes up or down, that tells you the difference of your income when it comes to the residual payment.
Right.
But with a bond, what happens is in court, in law, if the company shuts down, that stock, you're asked out. It's dead. But a bond, that in court stands. So you can still get paid if the company goes out.
So does that count still, like, let's say I have a child and I want to take out a bond for him.
Okay?
Does that still count as a loan?
A bond is a loan.
Regardless? Okay.
A bond is a loan. Just remember that. It's
Okay.
nice and simple.
A bond
Got it?
is a
A
loan.
bond is a loan.
Now the government is in debt, right? The $1 trillion debt, I
Yeah,
believe.
government is in debt.
So is that good debt or bad debt?
Oh, that's bad debt. Now, I want you to do this, and this is for the sake of people on the call. If you're at the computer, I want you to look at how much money the United States government is in debt. But I also want you to look at how much money is actually printed and circulated now in the world when it comes to the United States currency. That number of money that's printed and that is actually around the world is not the same amount as the debt. It's much lower. So there's no way, if you were to take every single dollar, every single coin from the world of US currency and you put that to the debt, there's still gonna be a deficit.
Wow.
So, okay, I'm sorry, Charles. Oh, I'm very sorry.
And remember what I said at the beginning, don't believe me. So people need to go and research this.
For the audience, Richard's just
Now, mind you,
apoplectic.
hold your thought. Now, mind you, you have people who are killing themselves over negative debt, not understanding this game of money.
Yes.
There was a college student several years ago who killed herself, hung herself in her dorm room because of her student loans.
So how can we think like a bank?
How do banks work?
They hold your money.
They hold your money.
And they use that money to invest in I don't know, God knows what, and they accumulate interest off of the money that you gave them to hold.
Just
Yes.
answer the question. So they're lending money. That's what it is. So you're saying, how do you think like a bank? Now remember, you know what fractional lending is? Fractional reserve.
What
Do you
is
know
a
that?
fraction?
Okay. Fractional reserve is this. For every $1 that you put in the bank, 90% of that can be loaned out by the bank. 10% of that has to be in the vault. So if you take $10 and you put it in a savings account, that bank is going to actually loan out $9. They're going to give you 0.003% on your savings account, which is nothing. But they're loaning out that $9 in forms of credit cards, in forms of loans to other people, and they're charging up to 27 to sometimes maybe 28, 29% off your money that they're utilizing, they're using. So you ask how to think like a bank. What you want to do is, remember, we talk about, number one, pay yourself first. So now how can I take this funds that I have and how can I put it in other avenues that are going to bring me more money back?
Put into a whole life insurance policy.
Put it in whole life insurance
Let's
policy,
go.
or you can put it in certain type of stocks. You can put it in certain other things, alternative assets that are like
Investments.
that are not. I wouldn't say over the board, but there are other types of ways of investing that can bring you back more money than the standard investment. I particularly don't. I have some stocks, but I don't deal in long-term stocks. I deal in short-term.
Why not?
My age.
Okay, so you just wanted to get something real quick, basically.
My age. I'm not. Like I said, I don't have children. If I were to have children, no, definitely.
Okay.
Spending X amount of dollars, building up their portfolio. So when they're 18, 19, 20,
Decide.
the trust fund is set up. So now you do this, X amount is going to be released and all of that. I don't have the time to do long-term stocks. I just don't have the time. I'm in and out. That's my risk factor.
Okay.
I'm in and out.
Okay.
So when this is a lot to process, everyone. Okay, this is a lot to process. So let's give out to when let's bring it back to the 4 pillars.
4 pillars of wealth. Yes.
Of wealth.
Pay yourself first. Got
Okay.
it? Live within your means. So now it's simply that, and mind you, certain words that people use, they're okay. I'm an active investor. I'm not passive. So now, what I look at is this. 20% of all the income that I make is mine. So my world is now 80%. So if I can't do anything within that 80%, I need to figure out if there's something outside of the boundaries of that 80%, I need to figure out how to get more.
Let's go.
So when people talk about budgets are needed, but I know that my lifestyle is at this, and as long as I'm monthly making my lifestyle, I'm okay. If I want a larger lifestyle, I have to create more income.
Okay.
Got it? So that's protect yourself, live within your means. That's what that means. So now, if I'm bringing home $800, okay, 20% of that is going somewhere, and that's mine. The rest, that's my lifestyle. That's what I'm living off of. Live within your means. You notice that people live outside of their means. That's why they're broke at the end of the month. Okay? Number 3 is protect yourself. And that's through asset management, that's through insurance, that's through bills, that's through all of those things. And number 4 is send your money out to grow. So we're storing money. We're storing money. We're looking for opportunities. We're doing research. We're studying. How can I take this and how can I, with less risk as possible, flip it and make more money on top of that?
I'm gonna let Nyron and TC go ahead.
It's like living your truth in a way, understanding what you want.
Understand what you want. Having goals. You got to have financial goals. You got to have financial plans. Yes. Got it.
So Charles, as a financial instructor, what are your views about capitalism in general?
Well, I'm a capitalist, point blank.
Point blank.
I'm a capitalist.
So, are you a capitalist because of the opportunities that capitalism can afford you?
I'm a capitalist because the United States system is a capitalist system,
Okay.
and that's all it is.
All right. So, I mean, it sounds like you're
It's
just like,
capitalist system.
you know, it just sounds like, you know, you being a capitalist is just a consequence of you being in America. But I'm just talking about the concept of capitalism as a whole. Do you see it as an evil that a lot of millennials and younger generations do? Or do you see it as something that is a good thing?
It's a good thing as long as you're ethical. Now, like any process or any theory, it can be used for good or bad. Now, you have systems out there under capitalism that are totally helpful to everyone across the board. But if it's
Can you
doing
name some examples?
Okay, network marketing. That's a capitalistic system. That's totally helpful across the board to everyone because everyone is getting a piece of the pie. When you have discrepancies in the system of capitalism, that's when we have problems. When you have situations that are exploitive, let's say, for instance, when you are, how would you say, when you're poisoning from runoff from your product from the factory into the atmosphere, that's not good. And this is why it's key when you look at a lot of things. A lot of countries went to other countries outside of the United States to create their product because they didn't have the regulations that they have here, the EPA. So I lived in California, and I tell you, I lived in San Diego, 20 minutes, I'm in Tijuana. And the things in the
Really?
factories that I saw there, and these are the same products that were coming back over the border, and they were being sold for a top-notch dollar price. Yeah. There are a lot of factories that are in Tijuana, in Mexico, that you'd be surprised. And it's like, wow.
So, sorry.
Go ahead.
All right. So, I guess what I'm really trying to ask is, in a capitalist system where the end goal is to generate as much wealth as possible,
Correct?
could there, based on the very definition of capitalism in that sense, isn't that almost an invitation for corruption?
Oh, everything is corruptible. Yes, you are correct. Everything is corruptible.
So,
No.
So,
What I want you to do is, there is no utopia, there is no idealistic formula that everyone's going to be happy. Because you have people that are involved in everything. So there's a greed factor. So you have to take that into effect, knowing that there's a possibility that this can be exploited. And if there's a possibility, it will be exploited. Got it?
yeah.
So the question is, at the end of the night, at the end of the day, if you're a capitalist, are you okay with you achieving wealth and accumulating wealth? Have you caused harm or damage, or have you shortchanged someone? Have you done something that you weren't supposed to do? Were you corrupt in creating the money that you gained?
Okay.
Wow. Okay, so how much time we have left, Xavier?
It's 4:16.
4:16? Okay. We got I'll say 20, 30 minutes left. How much time do we have left?
Oh, I'm good.
He's good. He's good.
I'm good.
Okay, so, do you put your money in the bank?
Yes and no.
Yes and no.
Okay.
Explain that.
Let me explain that. What you want is, they say that you only need 3 months in the bank. 6 months will be a little bit more cushion. Now, here's what you do, and these are the things that we teach in Sunday school and financial literacy is, you have to know what your expenditure is every single month. So what you do is you tabulate everything of your costs, your spending, everything. And once you get that finite number, you times that by 3. That's how much you have in the bank. Everything else is going into other avenues and other things that are going to give you more money than what the bank is going to give you.
That's bars.
Got it?
That's bars.
Well, aren't those other avenues? Because I'm thinking about what those other avenues could possibly be. And the only things I can think of that come to mind are like the stock market,
Okay, that's one.
real estate,
Correct.
bonds, as you were saying earlier.
Right.
And outside of bonds, don't all the other things that I previously listed incur more risk than putting your money in a bank?
Yes, correct. But that's where the study comes in. That's where the study comes in. So now, again, what we're looking at a bank is, I got X amount of dollars in the bank. How much are they giving me for having that money in the bank? Now, if they're giving me 0.003%, if they're giving me 0.015%, but I can get something somewhere else, and I can get more than 15%, which is very high, I'd rather put my money in that place right there,
Even if the risk is greater.
even if the risk is greater.
So would one of those places be like at the health insurance, if you're choosing a health insurance?
It can be health insurance, yes. Now, you guys heard of self.com?
No.
No.
Okay, you guys talk about building credit.
Yeah.
Okay. Now, there are two types of credit. There's revolving credit and there's installment credit. One way to build your credit, if you're trying to build your credit, is open up a self-credit account. What they're going to do is, you're going to open up an account, you're going to be paying monthly for maybe a year, 2 years, but what they're doing is they're tabulating that and they're reporting this to your credit reports, on your 3 credit reports, as an installment account. Installment accounts are important because they are different from revolving accounts. At the end of the year or 2 years, they're going to give you that money back.
That's a whole jam.
I need to go do that.
That's a whole jam.
But
Now, that's just one account. There's another one out there, but again, if you have funds that you're sitting on and you're trying to build, these are things that you have to do. One of the things that we have to think about is, how can I maximize? People are getting paid, and you'd be surprised on how to, I don't want to say hide money, but how to put money in places where it's not illegal. So what I tell people is, if you come with an X amount of money, you need to pay your bills. What you can do is, what is your gas bill? What is your electrical bill? Put a couple of thousand on that.
You mean pay your bills?
Yeah.
And how is that a form of hiding money?
Because what's going to happen is, you're taking this money, you're putting it in one place, and it's tabulated and recorded, because remember, tax-wise, the government wants to know. So what you've done, I've taken my money, I put it into a bill. Now, the money that you're going to be receiving after that, that money that you would normally use to pay that bill, now you're taking that and you're putting it somewhere else.
Okay.
All right, you say okay. I'm a little confused. So you have X amount of dollars.
Okay, so,
You pay your bill.
okay, now
Isn't
watch.
theoretically
Wait.
the money gone because you paid your bill?
It's gone, but now, okay,
Listen.
January 1st, I come into $2,000. Got it?
All right.
Now, mind you, I have to pay $100 a month for my bill, gas bill. Got it? So what I've done is I've taken this 2,000 and I added it to my gas bill. So now, as I'm working, that $100 a month that I would normally pay my gas bill, I'm taking that and I'm putting it somewhere else.
Gotcha.
You understand?
Okay.
That's what I'm doing.
Okay. All right.
That works.
But it seems like the money just evens out in the end.
Oh, it evens out. But understand, what's happening is that you're learning and you're trying to find places that you're going to put that money to bring you a better return.
Okay.
Got it?
Okay.
Because if you have, remember, it's the steward of money, managing money. If I know that, you look at lottery winners, how many have gone broke 3 years after
Because they're trying to live off to that money instead of taking it and putting it in
they
other
were not
places.
taught how to manage money. You see that? So now, if I were to hit the lottery, which I don't play it,
I play it all the time.
it's not a problem with me, because I know how to manage money. But if I didn't, that money would be gone. because I don't know how to manage money. No one ever taught me how to manage money.
I did learn that the lottery is a number game. So
Okay.
it's
Oh, I wouldn't know. It just,
oh,
but I mean, I wouldn't know.
right,
But you do know that that's earned income.
yes.
So that's tax. So when it's just like sports stars when they get this bonus or the payout, but they don't understand it. It depends on which state they're in, which team they're playing for, how much money they're actually going to get from that number. So you look at so-and-so signed a 50,000 signing bonus and get all this money, but if they're living in the state of California, a lot of that is taken from them because it's earned income, as opposed to another state. And see, this is what a lot of people don't understand when it comes to the money part, when it comes to getting your earnings, and it's not what you make, it's what you keep.
Let's process this all together. So the first is the self account.
Self-account, yes.
What's the second one?
Forget it right now. It's off the top of my head. I forget off the top of my head. I'll bring it next time. Yes.
Okay. Look, Laquanya, can we come back after when can we come back like next week or a week after that? Is that okay?
For what?
For you and Charles, is that okay?
Well, yeah, we'll be here next week for the mixer. You guys are gonna be in attendance and purchasing tickets to bring up all of us.
Yes. Let's go.
Okay. So we'll be here for that. So, we said we conducting business, but I'm sure Charles is gonna give you a few seconds just to talk about what
Put them in a small room.
That's what I put them in a small room.
Small room.
We're gonna do it like, I don't know what you guys' age ranges are. We're gonna do a video music box style. You just put the mic in front of you. Ralph McDaniels?
Yes.
Yes.
That's cool.
Well, I have an audience too. Let's go.
No idea.
We can have an
But
audience too.
yeah, I think that's a great idea, Charles. What
What's
do you
that?
think? He understands Ralph McDaniel style. You can take commentary like
That
that.
wo-
No,
it
we're not
works.
gonna talk business, but we do want to grow the platform, not just Sunday school platform, your platform, Sam's platform. So,
For those of us ignorant to the concept, what did you call it?
video music box,
Yes.
Google it.
Okay.
All right, so here's one thing about our listeners also, and plus Nyron, right? We had 2-3 guests. We had 2 or 3 guests. We asked them a question, and they said, just work hard
Oh my gosh.
and just be yourself.
Oh man, those are the worst.
Another.
They sound like
Okay,
Instagram,
but
man.
what was the question?
It would be something like, how did you start your business? Like, what was the step-by-step process? And then they would say, yo, you know what I mean? I just put my nose to the grindstone. I worked real hard,
So-
I pray faith is important. Faith is real
Yeah,
important
you know
when you
what?
start.
So that is not a wrong answer, right?
It's not.
That's
It's
a
just not.
terrible answer.
It's
No,
not
it's
detailed
not. It's
enough.
not, because it's the truth.
It's
But
not
It's again
wrong.
about what we had said before, what I had said before. People tell you what to do, but they don't tell you how to do it.
Yes.
Yes.
So yeah, you gotta work hard and keep your nose to the grind. But probably someone told them something. They told them where to go. They told them who to talk to.
And those are the questions
right?
we are asking
And-
for.
But this is the problem, and this is why this is what makes Charles special, because he taught me, and I could teach other people because we have the same mentality. People don't want to share information,
They don't.
right? Because we don't live in a society of abundance. They think that you can't get what I have because it won't be enough for me, which is the problem with our people in general. It's the crab in the barrel in general. So like, I make a big sandwich. I don't want you to get a bite because it's going to be less for me. No, we all got to eat. Then we all get stronger and we can all build together. So that's where that comes from. That was somebody who's telling you, work hard, do this. Because he don't want you to know the game.
Right.
Because he doesn't have an abundance mindset.
I think
Be your own people,
I think
man.
what it was he was there promoting him more than teaching the people.
Right.
That's what I think that. Yeah, that's what I think that was
That's why I
about.
said, what was the question?
Yeah, it would be something like that. It would be something real simple. What was the paperwork you filed to get your business going? Well, I grinded, I
had to
hustled,
go
I got what I needed to get in order to get my business up and running. It would be the worst responses.
But this is the thing, you can't say it's the worst response. That was their response. Even though you wanted more, we wanted more.
Well,
Yes.
Maybe they
But-
didn't know.
That too.
How could you mess up?
Because
what-
they can pay somebody else to do
maybe,
paperwork for them.
Maybe they didn't know. Now remember, you have 2 sides of business. You have the operation side, you have the admin side.
What
You
is
gotta- Operations and administration. That's two sides.
Okay.
So administration deals with all the paperwork. Operations deals with the day-to-day operations.
Gotcha.
So maybe maybe he was the front for the operation side, and someone else was in the background with the administration side, taking care of the paperwork, making sure everything is legal. We don't know.
So, Charles, I want to say thank you for all the information that we got to process, because once this video comes out, this is going to be like this is going to be one of those videos that you have to watch it like over and over again. How are we on time?
It's 4:30.
All right. So, Charles, are we good?
I'd say we're good. We're good.
Okay. So, any questions?
I have several.
Several. Okay.
Well, I was, as we were speaking to a previous guest about investing in stocks, and she gave an okay answer. How do you pull out? When do you know to pull out from stocks?
Can we stop saying pull out?
No.
How else are you supposed to say that?
Sell.
So here's what you do, okay? And this is one of the things when I teach, when it comes to your question. The hardest thing, that's going to be the hardest thing for you to do, is to close the sale. That's the hardest thing to do. No matter how much you make, something inside of you is going to go like, maybe I should let it ride just a little bit longer. Okay, maybe. Okay, it's looking good now. Maybe if I wait another 5 minutes, if I wait another 10 minutes, okay, I'm going to get more. What you have to be crystal clear is when you're dealing with stocks, when you're dealing with Forex, you have to have a plan. This is what a lot of people don't teach. You have to have a goal. So with this trade, I want to make $20. And once you cap that $20, you shut it down. This is where the people get all confused and messed up, is because, oh, it hit $20, maybe it'll go to $40. See, you have to have that end goal, and you have to know exactly what your motive and your profit margin is going to be. That's when you close out. See, you're letting it float. Got it?
Got it.
See, you have to be strategic. This is why I say actively investing is knowing that for this trade, I want to make $20, I want to make $30, whatever that is, and then I'm shutting it down. You can always open it back up, but it's you want to quote unquote secure the bag. I got what I set out to do, now I'm okay. Does that answer your question?
Yeah. So I mean, I'll give it.
So let's do this. Let's stop looking at the hard answers or the intellectual answers, and let's bring it down real nice and simple. Again, with this trade, I want to make X amount of money. Once I'm done, I'm killing the trade. That's it. Now, do I want to get back into it? I can do that. If I don't, I've done what I've set out to do.
Now, can you become wealthy using the stock market, or is it just more of like another placeholder for your money, not unlike a bank, just with higher returns?
Okay. Stock market, long term, is slow. You can make a whole bunch of money, but remember, we're looking at time. It's boring when it comes to the stock market. But understand that, imagine if your parents, when you were born, bought some stock for you, and the age you are now, where you would be. So you can make a lot of money, but you have to understand when it comes to the stock market is you have to have a lot of money in the game. Got it? Mm-hmm. So what you have to do is have to look at the dividend payouts. Dividend are every quarter. How much money is going to come from me through this dividend, through this stock? But also remember, you got to look at how much money is actually being nestled away that you can't have access to, that you can't touch. I personally don't do long term. I don't do it. It doesn't work for me. It just doesn't work for me. It's not enough there. If you look at the price of Chipotle right now, you look at how much in the dividend for that, it just doesn't make sense for me. It's pennies. It just doesn't work for me for a 3-month payout.
So what are the short-term actions that you take?
Penny stocks.
Can you elaborate, please?
Penny stocks. if anyone has a calculator, if you guys have a calculator, let's do something. And I'm going to show you something real quick. Okay, no, I want you to do it because okay. So now, penny stocks, I get a stock at 0.0001.
0001.
Okay. I get a stock at penny stocks. Anything under $5 is considered a penny stock.
Okay.
0.0001. I buy $1 million of those. How much is that?
So that's what?
Use your calculator.
Yeah, you should calculate it.
Okay, so how much you putting in?
I'm going to buy $1 million.
$1 million.
$1 million. So
Right.
that's times.
6 zeros.
Yeah, 60.
Yeah. No, we're gonna put 6,000. Let's say 6. No, I'm
No,
sorry,
no,
not
I need you to
6,000.
put $1 million. Yeah.
Put $1 million? Just
Yeah.
put 6 million.
No,
No,
it's not 6
no.
1
million.
million, look.
Okay, we got the answer.
No, it's okay. It's
No,
okay.
no, that's the answer. That's the answer. So now I just bought $1 million of this
So that's
stock.
okay. So that's 100.
I just spent $100 for $1 million of these stocks at 0.0001.
Okay.
That's how much is it going for.
So
Wait, hold on. So now,
Okay.
you got it? You got what I'm saying? $1 million of this stock, 0.0001, $100. I just put the $100, right?
Yeah.
It moves to 0.002.
Okay, I see where you're going.
okay, I see where you're going.
What was that?
I see where you're going. Okay.
$200. I just made $200. I do this twice a day. I'm good.
Yo, do you see how many balls is hitting in this episode?
I do that twice a day. I'm good.
Okay, so my question is how.
And that's with a $100 investment.
Go ahead.
All right, so my question is, how do you find out information about the penny stocks, and where do you begin?
Well, that's when you take my class. So that's when you come to Sunday
there
school.
goes the selling. There goes the
That's when you come to
advertising.
Sunday school.
Okay.
Okay.
You got it?
Just work hard.
For those, see, I want you guys to understand, people who are listening to this, they're not going to get everything at once.
They're not.
Because
They gotta
I don't
do
want
work.
people to say, I was on that class and the guy said this or the woman said this and then, it didn't work. No, you have to. My workshop, my stock purchasing workshop is a 3-month workshop. That's what it is. And you're going to actually be trading in a demo account because I need to make sure that you understand how to pick them, what to look for, the processes, and then once you're ready, when I know you're ready, I approve you to actually go live.
Got it.
You got it?
That's good. That's good.
Got it?
That's good.
So I'm just letting you know.
No, that's good.
So I just shared something with you guys that I don't share with a lot of people, just because I do that 2 times a day. I'm good. I'm finished by 11, 12 o'clock.
But you're putting a lot of faith in the market, though.
I've been doing this for a while. Now, I get that, so now my payout, if you look at that, Monday to Friday, that's more than that dividend that I'm getting every quarter.
Makes sense. Okay.
But you got
That's
to
quick.
determine
Thank you,
what
sir.
you,
Right.
Thank you so much.
you got. But you got to determine what penny stock to buy, right? There's no financial advisor. You have to do the ground research yourself.
That's what we do.
Okay.
I show you the process and how to do it, how to look for it.
Okay.
He gives you the tools, basically.
Yeah. I teach, remember, I can't tell you which one to
Yeah.
pick, but I can show you, look at this is how it works, plug in the numbers. Don't be afraid of the numbers. You gotta look at it. Let's look at this, let's get the ticker, let's go to Yahoo Finance, let's look at the history of it, let's look at the numbers, and I teach you how to look at the charts and how to read the charts. Yes.
And I'm glad you put that out because I got shares in AG and AG&C.
I don't know what that is.
It's funny and AG&C is, hold on, I don't know about it in the top of my head. I'm about to get on Rob. Okay.
And what are they going for? Okay.
I don't know about in the top of
Now
my
remember,
head.
when it comes to a stock, you guys gonna hold it or you're gonna sell it. So that's what you have to remember. So if a stock increases in price and you sell it, you don't have that stock anymore. You got, one of the things we have to understand is that there's wealth on paper, which to me doesn't mean shit.
Okay.
Because today, my stock can be up this high, and then, as you said earlier, it fell. So my net value is going to fluctuate.
Okay.
So when people talk about they own this and they own that, blah, 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 when it comes time to liquidate, you're going to be surprised. You're not going to get the value of what you think it is. See what I'm saying?
Yes. So while I was speaking, the whole point what I was saying about AG&C is that they pay their investors in dividends of 12 cents per share
Okay.
a month.
A month. Got it. Now, 12 cents per share a month. How much do you want to make from this AGC stock?
At least, like, I know I got to put like a lot of money
Got
into
it.
it.
Now you're talking about, as Laquani said, you're talking about short-term game and long-term games. You have to have it in for over a year
Yes.
and a couple of days.
Yes.
Now you're putting money into a process and you're only getting 12 cents
Per share, yes.
per share. 100 shares is what, $1.20?
Yeah. Yeah. So, but if we put money into it, it grows.
I understand. I
Yeah.
understand.
So the point what I'm making is that I put my money into dividends.
Right, dividend
But
stocks, yeah.
I believe in dividends.
I was just saying. I got you.
So most of them is really into real estate dividends.
Okay.
Because they grow like apartments.
Do you have real estate or real estate investments? REITs.
REITs.
Okay, got it. Okay, got it. Now REITs are different.
Yes.
No, REITs are different now.
Okay, talk to me.
Well, remember, we're talking about monthly payouts of REITs.
Yes.
So whatever that is it can't be 12 cents.
So
For AGC?
yes.
Is that retirement, real estate investment trust?
So not
Okay, because
Really?
it's a little bit more than that when it comes to, a real estate investment trust is, it's a stock where people are paying their real estate. So what happens is you're investing in that stock. So every month you're gonna get a dividend from people paying their rent.
got it.
Yeah, got
Okay. Wow. So
I like REITs though. REITs are different because now we're talking about more of a return coming back in. Got it?
okay.
So yeah.
So a little bit. All right. I know we've been going a lot. So real quick, and then after I'm gonna let TC and Nyron ask the questions, and then after that we're going to go in conclusion.
Got it.
We're gonna close it out. Final thoughts, and then how can people follow you and everything else.
Okay.
So real estate and real estate REITs.
Okay.
What's the difference?
So real estate is real estate.
Okay.
REITs are stocks.
Got it.
So look at it this way: a real estate investment is a portfolio of buildings that are in this portfolio that they're paying every single month for their rent, and you're going to get a dividend from that every single month.
Got it.
Got it?
Got it. Okay.
So
Thank you.
WeWorks has, if they do, they have their real estate investment portfolio.
Okay.
And people who invested in that, every time they pay their bill, they get
get
a
it.
dividend. Yeah.
Okay.
Got it.
All right. Thank you.
Makes sense?
Thank you. Yes, absolutely. Complete sense.
I
All
thought-
right.
I thought
TC,
they were gonna-
Nyron.
I thought they were going to ask me about Bitcoin and all that stuff.
I don't trust that funny money.
No,
I don't trust that
Bitcoin.
funny
No,
money.
Actually, Bitcoin is
It's booming right now.
it's booming right now.
Yeah, but
Ethereum is
I
booming right
feel
now.
like one day the federal government is going to step in and squash all of that.
You think so?
Absolutely.
Because right now the banks really
They're trying
is
to come
owning.
They're trying to come up with the United States is trying to come up with its own virtual currency.
Yes,
you
we know
think
that.
that currency is going to
Yes.
wipe out the other current currencies?
Yes, and it's going to come to a point where the physical dollar is going to die, just like in the European countries.
I'm not denying that, Rich. All I'm saying is if it's not backed by the federal U.S. government as currency, I don't trust it. I call it
So
funny money.
hold on for a second. Let me stop you real quick. Let me play God's advocate. I don't say devil's advocate.
All right.
Hold on for a second. I say God's advocate.
All right.
So let me tell you something real quick, right?
Look at his shirt.
If it's not FDIC insured,
Okay.
then you don't trust it.
No.
Hold on for a second, Okay.
Why is this so
I want you to process this real quick,
Why
right?
is this so enlightening for you?
I want you to
I'm so
process this.
confused.
I want you to process this for a second, right? if it's not FDIC insured under the government, you're gonna say that you don't trust it.
I don't trust funny money. No, I do not.
Okay.
All that for an okay? You had a whole huge buildup. You don't trust. Oh, you don't. Okay.
Now, you
That was
guys know where the FDIC comes from, right?
And no.
No, actually, no.
After the stock market crashed, when they found out what actually happened, the government stepped in to regulate the whole stock market system. The FDIC was created because what happened was those banks were actually trading people's savings accounts. So the FDIC was brought about so that people can start having faith and confidence in the banking system again. So they said that X amount of money, $250,000, is insured. So if you have an account of $250,000, if anything happens to that bank, insurance-wise, you're supposed to get that money back. A lot of people don't know that that's the number that the FDIC has. So they have accounts with way much more. So if something were to happen to that bank, let's say you had $1 million in it, you're only going to get $250,000 back. What you have to do is you have to pick it and you have to break it up and open up several more accounts and probably a different bank, because then you'll be covered. This is financial literacy. This is knowing and managing and stewarding your money, knowing that why should I have more than what you're insuring me for when I can open it up in another account. Yeah.
So I think the last question I have, it's back to the example I had with DocuSign. Just in terms of knowing what to sell stock. So remember, I bought it at $191 a share. I only bought one share. It went up as high as $300, and then it cut down in October, all the way down to 90. So I took a $100 loss. I still haven't sold it, and it's been slowly climbing back up. I think it's like at $110 now. But when do I sell a loss? When do I know I've lost so far? I've gone so far in losing that it's better to sell than to hold on and want that money.
What you want to do is you want to look at your percentage rate. You want to look at, it's called the risk factor. What percentage of this trade is going to be my stop out?
What's a stop out?
It's when you close the account, when you close the trade. So now, I'm willing to risk 15% of this trade, so that if it goes to that negative 15%, I'm going to close it down because I don't have faith and confidence in this trade anymore. That's called management. That's called risk management. So that's what you have to do. You have to look at the numbers, you have to do the math. So now I put $100 in this, so now if it goes to 85, I'm shutting it down. Okay. Because I want to make sure that I protect my income. I want to make sure I protect what. One thing about this, when we talking about Forex, you have to protect tomorrow. That's when it comes to, you have to protect tomorrow. So that's the key. So you have to be able to know that, and when it comes to stocks, again, you have to be able to know your stop out. And again, your risk factor. That's the key. And that all comes with numbers. It's not hard. The more you do it, the better you get. But you know that, okay, I want to make, again, X amount of money off this trade or off this stock, but if it goes past my risk factor, my portfolio, I want to make sure I protect that, and then I can be able to pull out.
Okay.
Does that make sense?
It makes sense.
So
You close it out.
we're gonna close it out. Any final thoughts?
The key is financial literacy is going to build the nation. It's going to build us as a people. But it starts with each individual person. So now, if you are strong, let's look at a brick in a wall. If you're strong and I'm strong and we put our bricks together, imagine a wall that we can build. Imagine a house that we can build. Imagine the things that we can build with everyone being strong. And the way we're going to be strong is we're going to make sure that our credit is strong and okay.
We're gonna make sure that we understand the difference between asset and liability. We're gonna be able to understand certain things so that when we start making these quote-unquote investments, we can minimize the risk, because that's the key, minimizing the risk, and knowing that the decisions that we're gonna make collectively and individually are going to help build us and help build us as a nation. So that's the key.
There you
That's
have
the
it.
final thought.
There you have it, ladies and gentlemen.
All right.
There you have it. That's it. Yo, thank you, Charles. Can we
Ways
have
to
it
reach.
again, please?
Ways to
What
reach.
did LeBron you say? I gotta go by.
By whatever the boss
Okay,
says.
but ways we can reach you.
Yes.
Oh, yes.
Or be able to do your course.
The Sunday school experience. You can go to YouTube, Sunday school channel, on the Sunday school experience at gmail.com. The Sunday school experience at gmail.com.
Okay.
There's a link on the link below also.
Yeah.
All right, thank
Got
you.
it. Got it. And through that platform, you'll have access to me, and then I'll read you out and see if you get personal touch. I gotta set up the buffer. Yeah, like, okay, yeah, got it.
Thank you so much, Charles.
Thank you.
That's it.
Thank you.
That's it. That's a wrap, y'all. We out.
Right on time.
All right.
You good?